In today's episode with Tanvi Ratna, we go through the new world order. We're looking at the reordering of trade, the global monetary system, the United States and its trade allies, what China's role will be in the future. We talk about Bitcoin and gold and much, much more. Tanvi is the founder of Policy 4.0. Policy 4.0 is an emerging tech think tank. They're working around statecraft and policy regarding crypto, AI, as well as the quantum computing phenomenon. It's a fantastic episode, and I hope you guys will stay to the end for her take on Bitcoin as a neutral global reserve currency. Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today we have Tanvi Ratna. She is the founder of Policy 4.0, an emerging think tank. Tanvi, welcome to the show.
Thanks, Nick. It's a pleasure to be here.
Now, today we want to discuss the Trump agenda and the global trade reordering. But before we do that, can you give us a little bit about your background and why you believe your diverse experience across geopolitics, technology, supply chains, the finance industry, digital currency, why your expertise in all of these topics sets the stage for your analysis on the trade reordering?
Thanks for that question, Nick. I think I've had a very interesting array of experiences in my life, and it's quite. We're living at a very interesting period right now, where statecraft is a mixture of everything, and I had the fortune of having experiences at the intersection of all these things. So I originally am an engineer, and I worked in the supply chain and manufacturing space. And I moved to geopolitics and policy after grad school, and I worked on the Hill in the Foreign Affairs Committee. And I was a geopolitical analyst for some time, and I got to work on economic dimensions of geopolitics for some time. And after that, I actually had the fortune of spending some time in the BRICS countries and the emerging areas of the world. And I even got to spend some time in India. I got to work actually with the campaign of Prime Minister Modi. I got to see, work on the digital public infrastructure that India launched. And I've seen sort of the rise of the whole BRICS bloc from a very different lens than I think a lot of Americans have. And I think that's very central to what is driving a lot of the administration's strategy at the moment. What is very central to it is that it's a very different world. And also, the tools that the administration are using are very non traditional. And I think that's the other thing that's throwing a lot of people off, because even the kind of economics they believe in is very different from what people know. And I think the kind of tools that they are using now and will use in the future will also derive a lot from tech. And I've spent a lot of time in the space of emerging tech, so a lot of my day-to-day work has been in AI and crypto. I was a blockchain lead at a large global consulting firm, and I worked in the weeds of how crypto policy, regulation, AI governance, and all these debates are shaping up. And I think all of this is very central to the strategy of the new administration. And I think, looking back at my life, it's been a walk through many different fields, which somehow now are all tying up together. And that's why I see the moves of the administration maybe differently from what a lot of other people do.
Yeah, people are talking about 3D chess or 4D chess, but you see it as 195D chess. I think that's a great setup. We'll discuss that shortly. Can you explain to people what does the word statecraft even mean? Because that's important for our conversation today.
Yeah, so the way I can lay out how I see statecraft, I don't think there is a standard agreed definition of it, but I see it as the marshaling of all the different resources that a state has, whether it's technology, human capital, commodities or other resources, whatever levers of influence it has. How do you marshal them to advance national interests? And the interplay of those and the strategy of that is statecraft.
Okay, now can you give us now your 30,000-foot view of what is happening? Explain your approach to you explain how it's confusing to a lot of people or that they're not really able to understand these non-traditional tools. Even the School of Economics itself is different from the stance that they're coming from. So just guide people, explain to them what is happening today in the world.
Yeah, that's a very big question. I'll try and lay out the way I see the chessboard, as they call it, and I'll lay out my explanation of what I think the administration is doing. Um, I think it starts from, we have to step outside the US. I think what's happening is a lot of people are trying to see everything from a domestic lens. They're trying to see it from the lens of what will happen in the US, what will happen to US industry. And I think those are going to be possibly the second and third order effects of what's happening now. But the story really begins in the world order. And I think the very basis of all these actions is a realization by the administration that the world order has fundamentally changed, and the role of the US in that world order has also changed. And all the institutions and the levers of power and the instruments that the US had established over the last many decades, those are not working as effectively as they should anymore. And that is why there is this huge rejigging, not just domestically, but also globally, um, across economic, security, political lines. So that is the broad scaffolding, I think, on which the entire premise of what they're doing is based.
The loudest voices in crypto, finance, and economics do not understand Bitcoin. Join Parker Lewis and Dhruv Bansal for Bitcoin Not Crypto, a 3-part masterclass that lays out why 21 million is the key breakthrough and how Bitcoin, not blockchains, creates decentralization and why everything else will be built on Bitcoin. Understand why Bitcoin works and why nothing else does. Register now at unchained.com/TBL. That's unchained.com/TBL. Back up your seed phrases in titanium. Stampseed is a DIY titanium seed plate provider. They offer their own hammers, seed plates, and the tools that are required to hammer your seed phrases into titanium. These plates are rust-proof, fireproof, and they stand the test of time. Stampseed is now offering customizable titanium seed plates. Upload your logo or design, and they will laser engrave it on the back. A secure backup that is uniquely yours. Make it personable, make it unforgettable. Stampseed.com. Okay, so we want to step outside of the United States. You mentioned that this is a BRICS issue as much as it is an American issue. So let's talk about the impact on China, the and then we can unpack more about how it's going to affect this world order.
Yeah, I think there's a lot going on there, and I think it's phenomena that's been happening the last decade. more than that. But I think since the Russia Ukraine war, especially, a lot of dynamics have shifted in the world. And I think the BRICS are very central to these developments. What has happened is a lot of deglobalization and a lot of decoupling of supply chains and a lot of shifts in alliances. Um, and I think in America, we're aware of these phenomena. We have heard of them in COVID, but the theater for a lot of this is actually outside America. And that's why potentially a lot of Americans don't relate to this, or it's not top of their mind when they think about what the US government's responding to. But if you see simple things like the petrodollar, which has been a sort of standing arrangement since the 70s. It's something that's a very a construct that nobody consciously thinks about, but it's been very central to the way that the dollar system and the American financial economic system works. And energy prices, I think, like all consumers are very aware, are very central to their day-to-day life and their day-to-day expenses. A simple system like that has seen fracturing across so many currencies and so many countries. If I'm honest, I think it actually, if you think of the constructs, I think it's the dollar actually that's very central. And I think it's de-dollarization that's very central. And that has been happening across energy primarily. And then it has spread across commodities or spread across the whole supply chain. But it starts with energy, really, because that's where China starts pricing things in yuan. That's where, after the Russia Ukraine war, Russia starts pricing things in gold. And India's already been dealing with Iran on oil in gold. And then the OPEC countries come in. So it's a cascade of things that I think they start with de-dollarization. And I think if you open with, you know, is this about the dollar or trade? I think possibly I can roll with it and talk about the dollar system.
So it sounds like, asking about the BRICS and China, what you really want to talk about here is the petrodollar and the dollar system, that's actually the core issue and the process toward de-dollarization. So can you start to talk about the theme of de-dollarization, and then maybe you can relate in how the individual countries in the BRICS are proceeding in their efforts to de-dollarize?
Yeah, absolutely. I think the question of tariffs is something that people see in conjunction with trade. And because of writing around this, people also are questioning how it interacts with the dollar system. And I think these two are quite linked. The dollar and the trade systems are quite linked. And the BRICS come in here because in the last decade, the BRICS itself has arisen as a sort of alternative coalition to the G7. And the BRICS have also started representing a growing portion of global trade and economic activity. Um, and in terms of what's been happening in their trade arrangements and their currency arrangements is a very clear trend of de-dollarization. And that de-dollarization has spread into the way that energy is priced. So I think a lot of people will be aware of how China's been buying oil from Africa and other places denominated in yuan. India's been buying oil from, it was earlier buying from Iran, and then Russia as well, in terms of denominated in gold, sometimes in rupees, sometimes in dirhams. Russia itself, after sanctions, started pricing oil and gas and gold and rubles and gold as well. And people are aware that China itself was working very actively the last 15, 20 years to set up arrangements with Iran, with Venezuela, with Russia. Now they have that special relationship. And that whole region, and then the OPEC countries, with whom China basically initiated the GCC summit with, um, China was what you were seeing really was the rise of almost a challenger to the petrodollar system. Something that you could call a petro yuan system was already rising, and it was rising, it had risen quite significantly by the year 2022, I would think. Right after the war, there was a period of very rapid um, adoption of alternatives by many central banks. And in the space of blockchain, which both you and I have worked in, there were a lot of these experiments, the MCBDC, the icebreaker, and all these central bank projects where they were really working on alternative rails to the US system. And I think the real alarm bells started ringing on the back of this development, because uh, this was catching momentum, and most of the BRICS had started developing alternatives to dollar settlement. Most of them had started building CBDC projects. And this is one sphere of, it would impact dollar demand, it would impact the very fine balance in systems that we have that are running the whole dollar plumbing. If the petrodollar is hit, it has many repercussions for that ecosystem. So this was one development. The second development, which you can see mentioned also in the writings of Moran and in that paper that I had shared, is the share of global economy was shifting out from the west to the east, and the US as a share of the global economy has also been shrinking. And that lays two different pressures on the dollar system, in the way that it's laid out by Moran. The first is, since Bretton Woods 2, which, and I'm happy to differentiate. So Bretton Woods 1 is the system set up at Bretton Woods, where you're still in a gold-backed system. And once you're in Bretton Woods 2, you are actually off the gold standard. And that's when the constructs of the petrodollar, eurodollar, and all of these become very important. And what happens in Bretton Woods 2 is most of the world, if they are producing and exporting to the US, what they're also doing is their surpluses are in dollars, and they're recycling those dollars back to US treasuries. So the US buys goods, pays for them in dollars, countries earn dollars, and they take their national savings and they park it back in US treasuries. And this created that cycle of the exorbitant privilege of the dollar. So when that system starts breaking and countries are no longer circling back those dollars and savings into the dollar system, there's basically two phenomena, and you can tell me how to lay it out. I mean, the first is the trading dollar Okay, the trade dollar, the trade weighted dollar, and then the fact that our the trade weighted dollar has actually gone up a large amount because our imbalances in trade have just been growing continuously. And Moran and team believe this is a feature of the system, not a bug, right? This is created because of the design of the Bretton Woods 2. And the second thing they believe is that because of this other phenomena where we are the reserve currency and people are parking their savings into the dollar, because of this we don't have much flexibility to manage inflation easily, right? Because even though inflation is very high, even right now interest rates are very high, but the demand for treasuries is always high, right? It doesn't help the um, the system basically gets set up in a way where we are unable to either competitively export because we are always blessed or cursed with more purchasing power, so it's always more efficient for us to buy rather than produce, right? And that's one of the first planks that they want to attack in the system. And the second is that we cannot constantly run deficits to um, absorb the savings of these countries. We can't have the recycling phenomena doesn't let us balance our own currency efficiently.
In our understanding, and what Dr. Myron is saying in his paper and his speech, is that when the U.S. buys goods from overseas and it exports dollars, those dollars get recycled back into U.S. treasuries. And this creates an imbalance. Now, there's an aspect of this system that the U.S. relies on, and then there's an aspect of this system that prevents the currency to rebalance, which creates this artificially strong dollar, or maybe it's artificial, or that's just the result of the system. But we have a dollar that's too strong as a result of this, and so they want to walk back some of this. So now you can get into the policy side. How are they going to manage it, and what is it a is it a zero sum game? Are they going to lose some of the financing boost from overseas? Just kind of walk us through what is the win lose situation here.
Yeah, I think this dynamic has existed for a long time, and for a long time it worked fine because the the way the Bretton Woods 2 system worked is um, the US was consumer of last resort. It would buy goods from countries, they would earn dollars. And if they were high saving economies, they would put their savings into US treasuries, or in terms of the the petroleum producing countries, they would recycle them back as petrodollars. Um, and this kept some degree of balance in the flows. But what happened parallelly was the dollar always got stronger, always absorbed the trade imbalances, and so we ran persistent deficits. And the mechanism was such that it always made more sense for America to consume than produce. The way the system worked is it was always more efficient for America to consume rather than produce. And that's just a symmetry that would keep increasing in the system, because the more that America consume, um, the the better pricing also it got in goods and services, the more the exporters earn, the more that appreciated the dollar. And America just constantly ended up with overconsumption and persistent deficits. And this is an argument which I think is a big departure from the way that people view America and its deficit problem, where a lot of people believe it's about Americans just being obsessed with consumption and they're just always racking up debt and buying too much that they don't need. What Moran and Go have said is, well, this is a structural problem. It's something that the structure of the dollar system acerbates over time. And so we have now ended up in this very imbalanced system where at one end you have China, which is producing for the whole world. It's the world's factory. It is producing so much that it can never realistically absorb that production in its own economy. And on the other side, you have America, which is consuming so much. And as a consumer, it's bigger than possibly the next 5, 6 consumers combined. Um, and this divide is only growing. And I think that is what Secretary Besson reframed it, this whole US China imbalance, as a need to rebalance. And I think he framed that very well. And the system encourages this imbalance, is the basis of the argument that Moran has made in the paper, and that I believe is the basis of the thinking of the administration and why they're undertaking this very radical set of reforms, is that the system is not sustainable. The system is going to persistently lead to this vicious cycle. There isn't a way out. And for that, before we end up in a state of conflict, or these things usually end up in war or conflict, before we end up in a situation like that, we are going to consciously try and rejig the system. That is the basis, that I believe they're coming from. And that's why there is this sense of urgency. That's why it looks like too much too fast. It actually is. I mean, I don't think anything like this has ever been attempted, because even if you go back to a parallel like the war period, where we had the depression, Germany also had the depression, and nobody actually succeeded politically in internally rejigging the system. They were not able to steer and rejig the conditions internally so that it would not lead to conflict. I think the situation, acerbated to the point that it led to the World War. The system was only reset after the World War. And I think what is being attempted right now is not something we have seen in our lifetimes. And I believe the roots of it are in geopolitics, and that's why that's how I see it, and that's why I can see the levers tying up and making sense in terms of a coherent strategy.
So the strategy to begin with was tariffs, but it's also singling out non-tariff cheating and including currency manipulation. So how have you seen the first steps play out? Do you think what are the next steps, or what is the first order effect of the current measures that have been taken?
Yeah, that's a great question. So I believe at the moment, in terms of, I laid out the basis of what I believe is their rationale, which is that the system is flawed, and it's actually the economic system which has led to this distortion. Now, in terms of the gripes with China that are there, right? They actually, there is some degree of nuance there. So I think when the US entered the Bretton Woods 2 sort of era, which many say actually begins with China's entry into the WTO, but you can say it started from when we went off the gold standard. The belief was that free trade is good, and free trade leads to democracy. Free trade leads to a sort of standardization of a rules based order across the world, right? So when we see the neoliberal worldview and the systems that were built for that worldview, I think they're not coming from just a sort of naive belief in a rules based system, in the US being the right thing to do or the ethical thing to do. I believe these were also geopolitical constructs. And along with Keynesianism, which spread in after World War II, I think neoliberalism made the perfect anchor or the perfect basis for the spread of free trade. And free trade everywhere was a perfect anchor for the spread of a rules based system, a market based system, and politically the spread of democracy. So these together, if you see, have always been the planks of the American world order, right? And even if you see the language used in our interventions abroad, it is about democracy. It's about preserving values. If you see the work of the IMF and World Bank, it's about pushing for market based reforms, because this is what worked before. And at that point, there was only the US. It was a unipolar order, there was no challenger. And at that point, the US economy was large enough that it could absorb these deficits. It was large enough that it could still have high growth, and the flows into the US dollar system were sufficient to sort of offset the large, the consumption effect that this architecture was having on the US, right? So at that point, it was okay. And then the US economy starts, then the world economy starts changing pretty much. China enters the WTO. Um, it has consistent growth of 10%, 8 to 10% for years and years. And the composition of the world economy starts changing. And now you have the US, which is still sort of playing the role of the consumer of the world, which is still absorbing these large deficits, both to settle trade balances and for the reserve currency function. Um, but also, its industrial base is getting hollowed out because it is constantly incentivized to consume rather than produce because of the way the system is structured.
And can
And
you, I have to cut in here, the balance between the manufacturing base getting hollowed out or industrial base hollowing out and having being incentivized to consume versus produce, that is the dollar exchange rate, is it not? I mean, isn't it just a simple function of the price of the dollar, or is it something deeper or multifaceted as opposed to just the currency itself?
yeah, so it I think that the question is, does the dollar price, or if you're talking about the DXY price, is that the right clearing price for the dollar, right? And I think that the basis that Moran has in his paper is that it is a clearing price for perhaps the reserve function of the dollar. Um, but it's not the right measure for the trading system. It's not the right clearing price for that phenomena. There is actually he brings up the idea of the trade weighted dollar. And this is a measure of the dollar versus other trading partners. It's a measure of competitiveness in a way. And he says that has been going up to that's gone up to about 200. You know, so there is an imbalance that's happening in trade flows, which, because the dollar also has a function as a reserve currency, um, it is not getting balanced out in the price of the dollar, because the dollar is serving multiple functions compared to other currencies. Um, and their gripe with China, and what Besant was talking about yesterday, I think, at the IMF, was that with the WTO entry, they expected that China would move the way that the neoliberal strategy dictated, that it would become more rules based, it would become market oriented, and eventually it would become democratic, right? But that's not what happened. And I think China's system, and I've written about this in a separate essay, is very unique, very different. It's not really a pure communist system, nor is it a pure market-based system. It is also very different from the American system, because there you have all the arms of the economy, whether it's the fiscal, monetary markets, the private sector, they're all directed by the CCP, by the party. And there are actually structures that bind the party with these different arms. And so China does not respond to market pressures the way that the American system does. And nor is their economy as open as the American economy is. So there's a lot of imports that came in from China, but it's not like a lot of US exports actually comparably advanced within China. And the problem was that this is a phenomena that has existed for years, and it's not just with the US. Like, there are a lot of trading partners of China who have imbalanced trade with China. A lot of trading partners have trading deficits with China. So by framing the problem in this way, I think the US has actually done something pretty clever, because I think this is a shared problem for many countries, is that they run persistent deficits with China. And it's also a problem for China, because they they are forced to export. And now that exports are slowing, the world is decoupling, demand has taken a hit across the world. China cannot grow with that model at the anywhere near the rates that it did before. And China is itself in the search for its new model. And in 2018, they had their big consolidation and their new plan, and they have been moving towards consumption for the last almost a decade now, but it's nowhere near the levels that are needed to absorb what China is manufacturing. So this imbalance is something that becomes a shared problem of many countries. And I think the way that Besson reframed it yesterday, he reframed the problem from tariffs and getting deals to sort of moving into a balanced trading system, and how everyone needs to rebalance. And I think that was a very intelligent thing to do. And that is a common problem across countries.
So if we think about China and isolating China in this situation, where maybe some of the tariff negotiations or the trade deals being struck between the US and its trading allies are meant to isolate China, do you believe that that's the strategy? Can you talk about the US going in first with India, Japan. It seems like India and Japan and perhaps South Korea are going to be three early deals. These are all of China's neighbors. So, talk about what the U.S. is doing. Are they trying to isolate China? Give us a little bit of your insight there.
Yeah, so I think something very different that's happening in these negotiations is what they've said publicly is that they're looking to club economic and security partnerships together. And that's not something, I mean, this is something that you can say existed after World War II. The Marshall Plan was something like this. With the Allies, you had the Lend-Lease. I mean, these were arrangements like that where you had a sort of political alliance, security alliance, and also an economic alliance. So NATO plus Marshall Plan plus Lend-Lease, all these instruments work together. So right now, we haven't gone to a hot war yet with China, but it looks like something like that is being replicated, and that's why these deals are very tight-lipped. That's why these negotiations, I think it's not characteristic in this administration that you don't know what's going on. I mean, usually they're quite public with that, but I believe these deals that are getting shaped are sort of multi-pronged. So there are, and I think a lot of this is going to come down to these energy trades, these supply chain routes. The reason why some of the first things Trump did when he came to power were things like Panama Canal or Greenland, which everyone knows that these are linked to shipping and supply chain routes. With Panama, everyone knows about, but Greenland, a lot of people are aware, is going to be home to those Arctic shipping lanes that are opening up. So there is a lot of thinking that in this new order, there are a few planks of how that economic chessboard looks like. And one of the first features, of course, is that it is multipolar, it is fragmented. So you have not hegemonic routes or hegemonic trade. You actually have a lot of different, regional powers. They are all optimizing for their own interests. They might all also be paying in different currencies. It is a fragmented system. That's the first thing. The second is that there are certain critical supply routes in this new economic order, and those have to do with energy, they have to do with chips, they have to do with certain rare earths or critical minerals and things like that. So these critical routes, I know a need that when you have a fragmented system and you have critical supply chains, a very key need for that economic system is actually security. And I think that is one of the US military was always the bedrock of American power, right? And the two facets of hard power are military and economic. And for many years, I think the US economy was seen as its real power, but the US military has always been um, the when push comes to shove, that is what upholds the might of America and Americans, the power projection of America. So I believe in this new economic order that you're going to see. Security becomes a scarce asset. right? These commodities and these critical chains are by themselves scarce. I mean, they're geographically distributed, and those are fixed things that you cannot change where these resources are located. So you work with the country to have them. But security, I think, becomes a scarce resource across that economic landscape. And I think what the US is very cleverly doing is it's going to merge its ability to provide security and its ability to provide a market for goods, and also its ability to provide the financial rails with the dollar system. And it's using all these things together in these deals. And I think there will be, it would make sense that they have conditions to restrict what China can buy or what these countries and partners can do with China. But that's a space where I don't think the US has. A lot will depend on these countries because, as I said, it's a multipolar order. So all the negotiating power is not with the US.
Now, it is the current strategy an admission from the United States that we are in a multipolar world. And you're suggesting that in these negotiations, security and shipping routes and supply chains are at the core. It's not, hey, don't trade with China, because they understand that those countries do have to trade with China, that they will have to find their own negotiation lanes with China, but that perhaps this is an American admission that we have progressed into that multipolar world. Do you agree with that? And how would you classify that?
Yeah, and I think I believe that this is admitting that without admitting that, right? You are admitting that you are operating in a very fundamentally different world, and you are trying to rejig all your institutions, whether it's USAID and things like that at home, or it's the IMF and the World Bank and these institutions in a global sense. You are trying to rejig the institutions, but you're also thinking very deeply about, hey, what's my leverage in this new world order, right? And that is my economy, that is my technology, it is my military. And I think soon, in terms of next steps, we'll probably also see it as my um, business environment. It's the productivity, the ease of doing business, the low taxes, the deregulation. All this is going to come in as a push later. But at the moment, I think the way the strategy is set up, it looks to me like a very clear-eyed, clear-headed admission that, look, we are in a different world. What we have does not work for this world, and let's realistically rejig all the levers that we have.
And when you explain about the security aspect of these trade relationships, it makes perfect sense to us because we have been basing our analysis in Dr. Myron's speech on that he made on April 7th, among other speeches. But in that speech in the Q&A, he did admit that the paper he wrote prior to joining the administration that you've been citing throughout this interview is not the official policy of the administration, because he can't say that. He wrote it before he entered. It can, however, be used as a model. But what we do have is his April 7th speech, in which he lined out the dual public good that the United States is providing to the world. It's the dollar rails and that Treasury, US Treasury, petrodollar, recycling, all of that is one. Security is the second. So the dual public good that the US provides to the world, it is in the middle. Right now, what you're telling us is that is in the middle of these negotiations. So they laid it out for us, for the public, with that speech. That is our guiding light, and we have to take it. So I'm going to point readers and viewers and listeners to. I'm used to talking to the readers too. Um, we are going to link for you the April 7th Dr. Myron speech that we've linked a few times. We've had him on. We're going to link our episode with Stephen Myron that we did before he joined the administration. Um, we are going to link the Secretary Bessent's speech that he gave this week on the basically the reimagination of the IMF and the World Bank, as well as the effort to balance. He said that China should want to balance. So we're going to link that speech as well. We'll also link the Myron paper that he wrote for Hudson Bay before that you have referenced several times. That will link all of those things for you guys to give you some background to this conversation. And now, Tanvi, I want to ask you one quick question. Is this also a shift away from NATO? Because if you're talking about security partnerships, is this maybe not, hey, we want to leave NATO or leave the arrangement, but just that we want to apply pressure where we can? Or is it just, hey, we have the best military in the world, we want to export that to other countries? And maybe you could even talk about weapons exporting and weapons manufacturers that are US based. If they buy our weapons, does that reduce the trade deficit? And is that part of the mix here? Sorry, it's a lot of questions at once.
Yeah, I think the security side of things is a bit more tricky. I think NATO is a tricky issue to look at, because a lot depends on the Europeans. A lot depends on to what extent they agree to raise their defense spending, to what extent there is agreement on the role of China and the role of NATO, where in a world where China is the aggressor and not Russia. Of course, they have an alliance right now, but I see a lot of dynamics happening there as well with Russia. We can talk about that later, but I think in terms of NATO, you're seeing some of the EU countries already getting ready to up their defense budgets. But I think there's still more. There's still a lot more questions there that the U.S. has to work out with the Europeans. But one thing I have been tracking the last few weeks is the international visits and diplomacy that's been underway. And you can see that 50% of that, whether it's Rubio or it's Witkoff, 50% of the time is in Europe. So I think there's a lot. There are a lot of dynamics to balance with Europe, in terms of NATO, in terms of even financial markets. But I think the biggest one is the role of China in Europe. And I think that is one that is probably top of mind for the US policymaker. And I don't think that I have an easy answer for that, because China's penetration in Europe is very extensive. Their alliances with different EU countries are very extensive. And I don't think Europe's the rejig with Europe is probably one of the longer undertakings for the administration.
I want to go back to the shipping lanes thing because it's something that we haven't thought a lot about. The southern hemisphere through the Panama Canal, the northern hemisphere going past Greenland in
Yeah,
these new northern shipping routes. Talk a
yeah.
little bit about why it's so important for the US to be thinking in these terms and how that helps them really in their core goal here, which is reducing these trade deficits and bringing more balance to world trade.
Yeah. So in terms of shipping lanes, I think a good indicator of how complex that gets is from the South China Sea. So many of your viewers also might be aware of how protracted that standoff has been in the South China Sea, how central that is to commerce. The bulk of global commerce is passing through that route, and I think there's been a lot of initiatives, whether they're the Belt and Road from China or the Arctic lanes that Russia has been working on, and also the US. A lot of these are about finding these alternative um, routes and securing supply chains. Um, and I believe this is possibly one of um, the relevance of shipping routes in the first steps of the Trump administration. I think laid very clearly that they are very serious about securing all these different um, inputs that will go into economic success in this new chessboard that I talked about. And I feel the calculus that the administration has in doing this is that they are serious about industrializing the US. They are serious about having high exports out of the US. And I think they're planning ahead to secure supply chains, secure markets, secure shipping routes. And I think the some of these steps are very obvious to people when they look at Panama or they look at Greenland. But think about more innocuous ones. Like think about the U.S. Navy that had operations against the Houthis, right? What is that about? Why do we suddenly care about the Houthis? I know it's been a security flashpoint for a while, but the U.S. military wasn't in there doing operations before, so why now, right? And I believe it has a lot to do with shipping lanes. It has a lot to do with there are a lot of talks underway, by the way, in the Middle East, and I think there's a lot to unpack there in terms of what's going on. But even the Houthis is, for me, something very linked to the calculus they have on Panama, on Greenland, and I think it's all part of this larger idea that we move out of being a consumer of last resort, we move into reindustrialization, and we become a sort of industrialized export based economy.
So I want to ask you one more question about the shipping aspect, because it sounds like the US is thinking decades ahead
Mm.
in terms of where it wants its supply chain, that this is not just a reaction to China perhaps weaponizing their supply chain during COVID. That is one aspect, but another aspect is the global reordering of trade and the US desire to reindustrialize and establish new relationships outside of the South China Sea. So, would you agree with that characterization?
Yes, yes, I do think it's a very long-term strategy. It has no context, or people don't have the contextual basis for it, so it appears very random. But I think it's fairly calculated.
Okay, so now we're going to have you back, Tanvi, if you will come back, because I have about 15 more questions here for you that we don't have all
Okay.
that time.
Yeah.
So I want to ask you maybe in a future episode about US aid, about the World Bank and IMF being reimagined. But and I would love to talk to you about extensively about the euro dollar system and the petrodollar, because
Yeah.
the euro dollar system is something that I study very
Oh,
deeply. So I'd love
that's
to
great.
compare notes on the euro dollar system. But we'll save that for next time. I want to ask you about gold and Bitcoin. So
Yeah.
we are, our the name of our company is the Bitcoin Layer. We believe that Bitcoin, and have for about 5 or 6 years since I've been writing about this, believe that Bitcoin is progressing to become a world reserve asset, a global reserve asset, not necessarily the global reserve currency or the rails for the entire financial system, but no, one of the core reserve assets of the world. And that thesis seems to be playing out a little bit. At the same time, we're seeing gold and its price rise, which tells us that it's involved in this reordering. So, can you give us your perspective on gold and Bitcoin, both today and going forward?
Yeah, I think there's a lot there as well. I think on gold, I think everyone is well aware that it is the classic monetary hedge, it is the classic inflation hedge, and you are seeing the architect of the current monetary system actively going and breaking down that system to some degree. So the flight into gold is quite understandable. I think there is there's a lot of dynamics underway in the bond markets. We saw, what I'd gone viral for this analysis that I put out on the tariffs, where I said, it's a tariffs are a tool for rejigging the order, which is something I stand by. And I said they timed it this way so that they could get cheaper pricing on the treasury auctions and move most of them to long-term auctions. And I think that backfired, and we saw that, right? The yields have gone up a lot um, because of the uncertainty that's there in the markets. And there, my belief is that I think bond purchasing is going to be a part of the negotiations. I think it is going to be a part of this alliance that gets formed, or whatever deals they make with the countries. I think very much the dollar system is going to be preserved to whatever extent it can be. And I think bond purchasing is going to be a part of that. So on gold, I think it is going up. And of course, we are in this global order uncertainty. So I do believe gold will do well. But I do think after the 90 days, there will be some settling in the markets. But these 90 days will be chaotic. That's for sure. Um, so that's my view on gold. On Bitcoin, though, I feel things are different. And I think in crypto, I spent a lot of time in crypto myself. I used to be a columnist for CoinDesk as well. I used to write on regulatory issues and things like that. And a lot of the statecraft and currency and crypto was things I used to look at. So at the moment, I agree with you. I do think it's a very golden time for crypto. Um, and I think it's stemming from a couple of things. One is that um, with this MCBDC and CBDC based system that the BRICS sort of all have prototyped. Actually, all of them have CBDCs, which is something that not a lot of people have not noticed. But China has it, India built it, Russia has one. Russia's building one. So most of the BRICS have already started looking at this direct settlement layer using CBDCs. And I think crypto will be a sort of parallel layer to that. I think one phenomena that a lot of people in crypto also are not happy about is that there is a fair degree of, you can say, co-option of crypto by institutional finance, or now you're seeing in stable coins that the bill says that they will only allow dollar-based coins, no algorithmic coins. So you are in a way effectively dollarizing stable coins, which you can argue that they already are dollarized, and that's what the demand is for. But you are now by law doing it. So I feel in the new environment for where you have a sort of rejigged order, you have new economic security alliances, you have some fragmentation in the monetary system, but the dollar still holds. I think there are three areas where I see that crypto will have very, could have very solid um, product market fit in a way. And I think the first, of course, is in stable coins. I'm still looking into some data, and it would be great to talk to you because I see that there is a sort of liquidity dry up of sorts in the euro dollar markets, the liquidity is shrinking. And I wonder if there is some plan to move more deeply into stable coins as a euro dollar system. But I think stable coins for sure will have a very already proven their product market fit. But the fact that the US is going to allow them to proliferate, it's a very bullish sign, right? Secondly, I think Bitcoin, I agree with you, similar to the role that gold is playing. Um, the only other asset that comes close to that is Bitcoin. It's just that Bitcoin still has some of the risk calculus that gold does not. But let's see how that evolves in this. I think in this next year and a half, there's going to be a lot of changes in the currency systems, and I think Bitcoin is probably the best candidate there, like right up there with gold. And I think the third thing, which I'm not sure how much has been done on those, but I think commodity coins could have a lot of value in this current environment.
Yeah, Tether is marketing more their gold coin as well. So we definitely see that emerging in the market. Tanvi Ratna, founder of Policy 4.0, an emerging think tank. Thank you so much for your extended analysis. We hope to have you back. Please tell people where they can find your work online. I know you're writing a Substack, and they can also follow you on social media.
Yeah, so you can find me. Look for Tanvi Ratna on X and Substack. That's where I'm most active. And I'm spending most of my time tying up these different developments and making sense of them.
We appreciate your work, and we'll catch you guys next time.
Thank you.